Hello and welcome to today's episode in which we're going to talk about the different types of businesses or corporations. You have a great idea, you have great talent, you're about to start your business. Now you're trying to incorporate, now you're trying to create your own company name. This is one of the easiest things ever. You can go online to a website like LegalZoom. Literally in about 10, 15 minutes, you're filling a couple of forms in there. You put your credit card number, about $150 or $200. And within a week, you'll get your EIN number, which is kind of like a social security number for your business. You go to the bank, you open your bank account, you're up and running. Or you can go to an accountant for about half an hour. Again, they're going to ask you a few questions, fill out some forms, and literally you're done. Make your payment, a couple of $100 or so. And then you get your information on mail from the state and your business is up and running. So actually incorporating doesn't take more than 20 minutes, half an hour, whether you go through an accountant or you go online. I highly recommend that you go through an accountant so that their expertise and their advice is readily available to you. However, the type of corporation or type of business that I choose makes a very big difference. The type of corporation or the type of business that you choose makes a lot of difference. Number one, in terms of taxes, whether you're a sole proprietorship or a corporation or an LLC, here you might end up being taxed twice versus here once, here more, here less. So take the time to do your research or talk to an accountant, especially one that you trust, to make sure that whatever type of business or corporation that you choose, you're aware of the taxation that goes into it. That's number one. Number two is liability. Suppose you go in and create your own you have your own restaurant and you put it under your name. So it's a sole proprietorship. I walk into the restaurant, I slip and fall, hurt myself, get a surgery, and now I'm suing you for $100,000. It's a big difference when it's an LLC versus a sole proprietorship. Here, I can come after your personal money, your personal bank account, and take it. Take your money, your personal money, versus if you're incorporated in a slightly different way, I can go after the corporation, and the insurance for the corporation might cover that. And I don't touch you as a person, your own finances. So when it comes to liabilities, when it comes to taxation, the type of corporate structure that I choose or the type of business that I choose makes a very big difference. So please take the time to speak to an accountant or at least do your research online before you start your business to make sure you choose the right one. Once you've chosen it, it's not more than 10, 15 minutes sitting with an accountant or even going to LegalZoom online. Yes, and just being able to kind of create that paperwork together. I'm going to mention 7 of the most commonly used. There's more than 7, but the 7 that people usually use. The first one is what's called a sole proprietorship, which means it's owned by one person. There's no legal or financial distinction between the business and the business owner. It's you that's representing that business. If it's a smaller business, if it's something that you're doing and you're keeping track of kind of your paperwork for taxes and so on, usually it's an easier, faster way just to kind of start off your business. A second one is partnership. This is where the business, financial, and legal responsibilities are equally divided amongst people. It's a team. You and me are in a business. We're partners, so we kind of divide things equally, like in terms of business, financial, and legal, and so on and so forth. And that's how a partnership normally works. The third type of business is what's called a limited partnership. So it's a partnership, but it's called a limited partnership. This is ideal for those interested in raising capital from investors who are not active in the day-to-day duties. So you and me are going to be working in the office on a regular basis, but there is Mr. So-and-so or Mrs. So-and-so that wants to invest with us for 50,000 or 100,000. They're going to be a partner, but they're not there on the day-to-day. So in that case, you want to do what's called a limited partnership, preferably. Number 4 is a corporation. It's independent and has multiple shareholders. And usually a corporation is appropriate for established businesses with employees. Number 5 is what's called an LLC, limited liability, LLC. And that's a blend between a partnership and a corporation. It usually has less regulation and no personal property is at risk. So you might hear that quite a bit. A lot of people will choose to go through an LLC formation. Number 6 is a nonprofit. Again, if you're building something for educational purposes sometimes, or for ministry and your place of worship and so on, that's a model that people do, or something that helps the community and people in need. That's the model that people go with, is the nonprofit setup. And then finally, number 7 is a co-op. This is where the earnings are divided among the members. And usually there's no external stakeholders. So usually those are the top 7. Like I said, it's very easy to create it, but you want to take a minute and talk to your accountant or go online and do a lot of research on it, because taxation makes a lot of difference, as well as liability. Best of luck in making the right decision.